Big news yesterday. More mortgage rule changes are coming out, and this time they're geared more towards those of us that already have mortgages that might be coming up for renewal in the next couple of years. Now, the big question behind this is, are these new rule changes actually going to do anything? My name's Miles Noack of the Noack Mortgage Team, powered by Indy Mortgage. And if you get any value out of this content or enjoy the channel, please consider liking and subscribing so that more people like you can see this video. Now, let's dive into these rule changes. So essentially, OSFI, or the Office of the Superintendent of Financial Institutions, try saying that 3 times fast, decided to make some changes to the stress test that they implemented back in 2018. Now, to give a bit of context into the stress test, essentially what we had to do is qualify people at a higher interest rate in which they received, either the 5-year benchmark rate or contract plus 2%. And that was for any mortgage. So that included purchases, refinances, no-fee switches, renewals, whatever. And what it did when it came to renewals is put you in a position where the renewal process kind of limited your ability to explore alternative lenders because you had to qualify at the stress test, where you might not have had to when you attained that mortgage. So it did kind of limit people's ability to move around. And what they've done is removed the need for that stress test on what's called a switch or a transfer. So a switch or transfer is where you take your mortgage, you pick it up, you move it to a new lender to get the updated rates, but you're going to leave pretty much everything the exact same. Your amortization stays the same, the balance of your mortgage stays very, very close to the same, if not exactly the same, and it just puts you in a position where you have a different bank with a different interest rate, which in a lot of cases can be beneficial. I mean, when it comes to renewals, you should be shopping around, you should be exploring more options. I mean, it's almost guaranteed that when your bank sends you a renewal offer, it's not going to be the very best mortgage rate that you can attain. And the thought process was that the stress test was limiting people's ability to do this. Now, when we take a deep dive into this, I've done a lot of renewals over the last 10 years. And I mean a lot. We do a lot of database management, we work with our customers, and we move mortgages as needed. So when a mortgage comes up for renewal, we're going to prepare a report, show you 5 different lenders, then we're going to look at what's offered to you and help you make the decision on what's best for you in that point in time. Does it make sense to stay where you're at? Does it make sense to move you somewhere different for a different product or rate? We go through that entire process with you. And if I'm being bluntly honest, the amount of people that didn't qualify to move over to a different bank if they wanted to was pretty minimal. In fact, almost negligible. Most people, once they have that mortgage, because you had it for 5 years, you've been paying it down, your balance is lower. Most of them qualified to move. So essentially, this rule change to remove that stress test on these no-fee switches. So it doesn't count for refinances, it doesn't count for anything midterm. It's simply on your renewal for switch files where you keep your balance and your amortization the same, right? So it's not going to affect a huge amount of people. And to be honest with you, it's not really opening the doors for a lot of people in the ways that I think a lot of people think it will. Now, one thing I will say about these rule changes that gets me really excited, it increases the amount of competition that lenders are going to have when it comes to these renewals. So as mentioned previously, generally speaking, when you get a renewal from a lender, it's not going to be the best rate. It's not. I mean, sometimes, yeah, you get that golden egg where they're like, hey, this is the best rate, here you go, and you're off to the races. But in most cases, it's not. So you end up shopping around, looking at different rates, you take it back to them, they drop the rate, then the other guy drops the rate and all this other sort of stuff. And when this rule came into play, it kind of limited that, but not massively. Because like I said, most of the people I've been working with, when it comes to renewals, they can move wherever they want, they qualify for it. So what this is going to do, hopefully, it's not going to really change, in my opinion, your ability to move. Unless you were super strapped, maybe you've had decreased income over the last couple of years, which of course we've seen through COVID and all this sort of stuff. But essentially, if your application looks the exact same, it's not going to be a huge difference. And generally speaking, what we see a lot of times too is people's income increases over years. So if you got a mortgage 5 years ago, chances are your savings increased, chances are your income's increased, right? And the balance of your mortgage has gone down. So when it comes to qualifying, it's really not a huge difference. So I don't think it's a huge change there, but I'm really excited to see what happens when it comes to these banks being competitive with each other. Because for a while, things have been a little stagnant. You know, they haven't really been pushing each other. And that's the one thing I love about this industry. You watch them. You see one bank, they're like, hey, we dropped our rates by a quarter point. You watch the other ones, they just can't wait to start lowering down as well because they want to be competitive. They want your business. It's not necessarily sales, but it's sales, right? So I think this puts a lot of pressure on these banks when it comes to these renewals, like, hey, you got to sharpen your pencil because I can go over there. Now, when we talk about renewals and processing renewals and kind of going through them, as mentioned, I have done a ton of them over the last couple of years. And one thing I've found is that having options is key. If you don't have options with your renewal and you're not shopping around, you're leaving money on the table. You really are. Because if you get a better interest rate, that's the best kind of money. It really is. You've already got the house, you've already paid the tax to buy the house and all these other things that go along with it. Lower interest rates just means more money in your pocket. So is it going to help a ton of people when it comes to renewal and shopping around? Probably not. Is it going to make people talk about shopping around more when it comes to renewals? Probably. And is it going to make banks sharpen their pencil and get a little bit more aggressive with rates? Hopefully. So there are some benefits, but I don't think those benefits are as large as people are portraying. I mean, I've been seeing TikTok and Instagram and YouTube be flooded with information in this. Like, oh, look at this brand new rule. This is going to be so amazing. This is the best thing that's ever happened to mortgage financing. It's neat. It's really neat. But that's about it. And that's my opinion on it. My opinion might be wrong. Now, if you have a differing opinion on this, post it in the comments below. I'd love to hear your thoughts. Share your opinions. Maybe I missed something. Maybe I was wrong at a certain point in this. Let me know what you think of these new rules. Once again, if you got any value out of this video, please consider liking and subscribing to the channel. My name is Miles Noah. Thanks for tuning in. We'll catch you next time.